Time now to spotlight the upcoming election and the impact it could have on markets. Joining us now for analysis is Dan Lefkovitz, strategist with Morningstar's Index Group. Dan, thank you so much for joining us this Friday. All right, let's talk about the expectations. You all have a lot of data on the expectation for impact, no matter which party is in. What are the market trends? What's the kind of broad takeaway you have from your data first?
Yeah, it's I'm going to, rather than infuriating half your audience, Diane, and delighting the other half, I'm going to frustrate all of them by being a politician and saying it's really hard to draw a causal link between the political administration and stock market leadership or bond market leadership. We did do a study a few months back looking at asset price returns under the four past administrations. Stocks did do best under Trump, and you could, attribute that to the Trump tax cuts and other sort of policies under the Trump years. But, there were also big tax cuts under Bush. And you see here that on an annualized basis, the Morningstar U.S. Market Equity Index was in negative territory under Bush. Now, there's obviously a lot of other factors happening. Context is key. There's a complex interplay of variables that you really have to look at. You can see here that, stocks have performed very well under Obama and Biden as well.
And then talk to us, though, about market trends in terms of, we'll start with Trump and then we'll go to Harris, about which sectors of the market would benefit most from a second Trump presidency. Let's start with that.
Right. So very interesting. I looked at what the best performing equity sector in the U.S. market has been under Biden. You'd think maybe industrials, given the emphasis on manufacturing, or maybe technology, given the CHIPS Act and AI enthusiasm. It's actually been energy, not renewables, but traditional oil and gas stocks have actually led the U.S. market under Biden. It's really counterintuitive. I don't know that you can credit it to Biden's policies. It's really market forces that are driving that. And if you go back to the Trump years, very interesting. The initial reaction to Trump was really positive for financials and industrials, basic materials, energy. The small cap value segment of the U.S. equity market really benefited most from the Trump election in November 2016. The perception was that domestically oriented, economically sensitive, rate sensitive sectors would benefit from the Trump platform. So there was a big rally. It was called the Trump bump at the time. But by the following year, the market had rotated and large growth stocks were leading. And the dominant equity sector under the Trump years was technology, even though initially technology sank after Trump's election because he was perceived not to be good for Silicon Valley. So I think it's really hard to make projections on different segments of the market, based on their policies. Eventually, market forces really take charge.
And then what sectors of the market do you see benefiting from a Harris presidency?
Yeah, so obviously the market's really busy scrutinizing all the policies of both candidates right now. Trump obviously is talking about tariffs, and he hates taxes, and he hates immigration. He's talked about interest rates being lower. Harris, for her part, has talked about price gouging. She's talked about raising the corporate tax rate to 28%. Who knows what, if any, of these platforms will become policy? Congressional action will be needed. Obviously, monetary policy is still the domain of the Federal Reserve, which is independent, at least for now. The courts often weigh in. So, it's interesting. So this is a big year for elections, not just in the U.S., but around the world. And a few months back, we saw an election in India, and there was a surprise result. Prime Minister Modi's party fell short of expectations at the polls, and we saw our Morningstar India Equities Index really take a big hit initially after the results came through. Their perception was that the reform agenda was going to be slowed down as a result of coalition government. But within a few days, the Indian equity market bounced back, and the market sort of digested the results, and investors refocused on the fundamentals in India, which is lots of good companies accelerating their earnings, benefiting from the country's economic growth. So there's often an initial reaction to an election that is fleeting in nature.
Oh, that's a good point, because I remember even you talked about the Trump bump, but when he was initially elected the first time around, there was a sharp drop when the market opened, but it just quickly recovered literally within the same day. But let's talk about one of his plans. He's talked a lot about tax cuts. He did that in his first term. If that is how a second Trump presidency would proceed, what is the impact you expect that to have on markets?
Very hard to know. First of all, I would really caution investors against betting on the result of the election. It's a toss-up right now. Congress, when you talk about taxes and spending, congressional action is really critical there. Control of Congress is up for grabs, so who knows what's going to happen there. So I would really caution against making big bets. It's based on, electoral results. And market policy reaction is going to be, it's really a roll of the dice.
It does seem to be that when we look at poll after poll, it just seems to be a tight race between the two. But what are your expectations for market volatility as we get closer to the election?
Yeah, there's no question that we could see bumps in the road. If you look at 2016, for example, volatility really picked up as market expectations shifted, and expectations for who was going to win the election, changed and sort of flip-flopped back and forth. And often this is that what I was talking about earlier, that initial reaction to the 2016 election. You can see that big bump in the small cap value segment of the U.S. equity market. And I think something, Diane, that's really important to stress is that the action, over the past 10 plus years has really been in the large growth segment of the U.S. equity market. That's not always the case. I talked about how during the Bush years, it was really a lost decade for U.S. equities, and small outperformed large, value outperformed growth. Ex-U.S. outperformed U.S. equities during those years. So I think it's really important for investors going forward to have portfolios that are prepared for a range of scenarios, because there's a lot of uncertainty out there, and we know that market leadership is really changeable, and you want to be ready in case different market segments, outperform going forward.
You make a good point about, how market leadership can be changeable, because I do remember some years when small caps really had a run, and they've been lagging in the market in this run-up that we've seen from last year through this year. They've started to catch a bid. You're looking at, today, obviously, there is some pressure across the market, but you're starting to see the Russell start to play catch up. What are your final thoughts from the data and the research that you all have done on Harris versus Trump presidency?
Yeah, I think, my main message, Diane, would be that, markets have thrived under administrations of all stripes. They've also experienced crashes under administrations of all stripes. Politics and elections really bring up a lot of behavioral risks for investors. There are a lot of emotions involved. There's a sort of a tendency to expect that, if your candidate wins, things will be good. And if the opposition comes into power, everything's going to go to hell in a handbasket. And that's just not what we've seen. So often the best advice is to not just do something, but to sit there. And like I said, diversification, so that you're ready for potential changes in market leadership, is really critical.
All right, great insight. Dan Lefkovitz, strategist with the Morningstar's Index Group. Thank you for taking us through your data.